I'm teaching on the market maker models this month. It would be horrible for me to let this go by and only talk about it in a review on Sunday after the fact. So I wanted to have something, and I wanted to make up for not having done anything all week. So anybody out there wants to do the scaling and measuring of, mine's bigger than yours type thing, I did your whole month in one trade. And that's if you were doing it with real money. So that logic that I used in that trade, that is incorporated in what I teach is my market maker buy and sell model. That was a sell model. Okay. So if you want to get a preview about what we're talking about, I encourage you to go over to your NASDAQ chart. Pull up your NASDAQ for December 2023. And I'm doing this from my phone because I don't want to turn my screens on, because I know if I do this with my main screens, I can turn this into a 6-hour session today. Do it, ICT, do it. I'm here for it, right? All right, so you want to go to NASDAQ, go up to a 4-hour chart. Some of you are like, I knew it was the 4-hour chart. I knew it. So if you look at your 4-hour chart on NASDAQ, December contract, and if you put your, give me a second here. You put your cursor or your mouse or whatever on the low ahead of October, and that would be on the 27th of September, Wednesday. That low formed at 10 a.m. on the 27th of September on your 4-hour NASDAQ chart, okay? And then we had another low form. Some of you are like, I'm waiting for these guys to do it on YouTube. I'm not pulling the chart up. I'll just listen to them, because I know these guys on YouTube, they take my Twitter spaces and they use their own charts and whatnot. So it makes it interactive, which is cool. I ain't got anything to hate about it. Then you have October 4th, that low. Okay, so you have relative equal lows there. So if you look at what price was doing between the 27th of September and October 4th on NASDAQ, that is what is referred to by me as the original consolidation of the market maker sell model. The high that was formed between those two lows on the 29th of September at 10 a.m., that's the high of the original consolidation. So that little trading range there, when I'm looking for a reason to go short, my highest probability trades, and folks, this is the part of these discussions where if you don't write it down and then take what I'm about to say and go back into your old data, your old charts, your old setups where you lost money, you're going to see that it was not there. And then that's the reason why you lost. That's how I discovered it. I looked at everything that I was doing with real money, and the things that constantly kept repeating, because I wanted to know. I wasn't trying to hide myself from it. I wasn't trying to shield my eyes and say, oh, I made a mistake. Let me pretend it's not happening and find fault with everything else except for myself. Now, there was a period of time when I was like that, but when I realized that this was never going to let me go, I was infected with these things, these markets. So I have to either learn to live with them productively and profitably, or I'm going to live a miserable existence, not being able to figure out anything to do anything with it. So my observations were, every time that I wanted to be a buyer or seller, when I finally figured out short selling, because it took me a long time to trust doing that, if I was going against what I'm about to outline here, I failed. So it goes without saying, if I can see where I was making these problematic errors that were causing me to lose my accounts, not just losing trades, blowing the accounts, because I would be over leveraging, placing Olympic level results and required them to be perfect, you've been there before. You're placing all the hopes and dreams on one trade execution. This is going to pass my funded account. I'm going to get a payout on this first trade with my first day, my first hour with my funded account, and you blow it. That's how I traded as a 20-year-old because I needed to get out of the life I was in. I hated it. I hated it. Well, in this 4-hour chart, that original consolidation between the 27th of September on the 4-hour and the October 4th low and the high on the 29th of September, you want to draw a rectangle on that. That trading range, okay, that trading range is something that the algorithm will reprice back below. It'll reach down below that. Not all the time. Sometimes you'll see it in the chart. Sometimes the market will just deny that. And that's why you have to use a stop loss. That's the time that you as the human will err. You'll make the mistake in believing that it will yield itself to you, and it won't. It'll get real close to it and stop. Perfect example, don't change the chart. Stay on this 4-hour chart for NASDAQ. But I shared openly what I felt that the gold market might do. And I felt that it could go for those relative equal lows. It went down to a target that I mentioned, but I still co-signed. I said, me personally, it would be reasonable to see it sweep below and take the sell side. It didn't do that. It vaulted higher. And then in an analysis I gave on the weekend, I said, it would run for the buy side. And for the fellow that said, you want to make money, fade ICT, go short gold. Woo! How about that, baby? Got your ass toasted, didn't you? Oh, I love it. I'm going to miss that much. I'm going to miss that so much from Twitter. Some of you got your earphones blown out, right? Whatever. It's live, baby. Sometimes it's going to happen. I've been talking long enough, okay? I've been talking long enough, and it has to swing the other direction, right? But that original consolidation between the 27th of September and the October 4th low, that consolidation creates and engineers sell-side liquidity or sell stops below those relative equal lows, okay? And if we're expecting price to go up to some premium array, some reason to go up, okay? Now, I'm going to use very specific, generic, retail terms so that way we can talk, because I don't know what level of experience you have with me. I don't know if you're watching this on YouTube and you found somebody that's taking my Twitter spaces. I don't have a problem with them doing it. I just don't want you taking my analysis or teaching videos and putting them up on your YouTube channel because I will tear your whole channel down. And I've done it, and I have a few of them. You're about to lose somebody, you're going to lose your channel because you're monetizing my videos. I don't go for that, and I'm going to take your shit down if you do it. And no, don't email me and ask me to take away the copyright because I won't. If you think that the market's going to go up to some retail resistance level to offer a shorting opportunity, I don't subscribe to that, okay? I don't view the market like that. I believe the market's going up to a premium, specific premium PD array, a imbalance, or liquidity above where the original consolidation was trading, okay? So we're expecting price to go up, to go lower. Where should it go to on the basis of declining? Right below those relative equal lows at September 27th and October 4th respective lows. That liquidity below there, they're going to want to engage that. It might not do it, but I believe we're going to gap down and open below that on Sunday. But I believe that's where we're doing it. Or we're going to open up lower, fancy dance around the open at Sunday, and then reach quickly down below those lows. One of the two things are going to happen. I personally want to see a gap way down there and open below it. That's what I want to see. Now, what I want to see is irrelevant. What I want to see should have no relevance over your trading and your trade decisions. But my experience, what I want to see as a trader, what I want to see as an analyst, what I would expect, that something's going to happen today or has happened, and we don't know because the internet's down in Gaza, northern Gaza. There could be all kinds of atrocities being done, some kinds of escalation. We have Sunday still before the opening. A lot of things can happen. Shocking things can happen. We're in that climate where things like that can occur. So these central banks will use that sentiment, that shift in fear, which I'm not a fear monger. I'm telling you how to master yourself in these environments. I'm not teaching you to be fearful that the boogeyman is going to get you. So I block people that do that. When they say I'm fear mongering on Twitter, you're a fucking asshole. Get the fuck out of here. I don't want to hear from you. I don't want to see your tweets. Go talk that bullshit somewhere else. I'm teaching you how not to be fearful. These things, I can't change them. You're not going to change them. You're not going to stop that war. America's not going to stop that war. Israel's not going to talk nicely and say, okay, we overstepped our boundaries. And the Palestinians are like, okay, we forgive you. And the Palestinians are not going to accept Israel in any capacity. So there's no solution. So we all have to deal with it. Every nation's going to have to deal with it. The markets are going to use it as a sentiment. It's going to cause all kinds of, ramping up in volatility. So you have one of two choices. Don't trade at all or learn how to navigate it. And I'm teaching you how to navigate it. You don't have to like or even subscribe to the things I'm teaching, but don't come to my fucking shit if you're not trying to learn because you're wasting your time. As soon as I see something that's offensive that I know that you're not trying to learn, I'm going to tell you pound sand, get the fuck out of here. So I'm not fear mongering, nothing. But I want to see it gap down below those relative equal lows on Sunday because it will be a confirmation that we're going deeper into that daily buy side imbalance. Remember, I was highlighting that a month and a half ago about that is going to be the quarterly shift target. Thanksgiving. I told you. I think if I'm correct, and I am 51 now, so I might be having a senior moment. But don't take my word for what I'm about to say. Go back and listen to the analysis. Go back and read the tweets. I'm not getting any money for you looking at old tweets. I believe I stated that NASDAQ by Thanksgiving, we should be down there in that buy center balance on this daily chart. Well, we're a little bit past midpoint of October. We have a couple weeks left. A lot of things can happen between now and Thanksgiving. And we're fastly approaching those relative equal lows on the daily chart on S&P and NASDAQ. There's real liquidity down there. The folks that thought that October low, that fall low is in, I told everybody there's no reason to own equities. There's no reason to own stocks. And where's the clowns that were talking some shit? You're getting eviscerated right now. That October low to me was suspect. It was like a fake trust it. And how do they make you trust it? Putting in fake pseudo support, double bottoms. Well, if you look inside that consolidation, go to the right of it, you're going to see that there is on your 4-hour chart, the 10 a.m. of October 6th. It's Friday. There's a fair value gap there. In that fair value gap, extend that over to the right. To the right of the high that forms on October 12th. All of this discussion is germane to the 4-hour chart of NASDAQ. Okay. And you might think, or might be thinking to yourself, man, I trade Eurodollar. You need to get off of this stuff. Talk about Euro. No, I don't. What I'm talking about here applies to every other asset class. It's not limited to just this. This is what price is doing. I'm trying to teach you to learn how to trust the language I've been using. There's a thing that constantly reoccurs over and over and over again, and it's the repricing to liquidity or repricing to inefficiencies. That's the market truism. That's the truth. It has absolutely nothing to do with the amount of buying and selling pressure. It doesn't lean on the logic of anything else out there. That's all the market's doing. If it's not doing that, it's consolidating. In the rare instances, and we're probably going to see more of these instances start popping up here in the coming weeks and months, you're going to see manual intervention, where you're going to see these sudden boom. Where did that come from? Perfect example, last week, look at your Japanese yen. In seconds, it moved 100 pips, and then erased it. It looked like it was a data error. Look like, what is this? Then you go across all the brokers and they all have the same thing. So I tell you, I don't trade yen. I do not trade that currency because it's absolutely highly manipulated. Swiss franc is too. And gold is equivalent to that. It's the event-driven market, but in wartime scenarios, you can see gold moving around a lot. But that fair value gap that I just mentioned on the 4-hour chart, if you extend that over to the right, it's going to behave like a point of magnetism. It's going to draw price into it again. It's going to act as a means of collecting interest, pooling interest into that range of that fair value gap on the basis of an inversion fair value gap. Now, if you have been listening to these long-winded rants and dry conversations, not over a chart, but in Twitter spaces, if I was a college professor and I was teaching a lecture and you paid for this course because it was part of your major and you actively wanted to learn, you would be literally writing down everything that I'd be talking about because you want to maximize the time with this professor or this teacher or the lecturer. When I sit down with these Twitter spaces, I'm not here twiddling my thumbs and talking for the sake of hearing my own voice. I'm telling you the things that you should be listening for and then writing them down like I'm going to say here. If I see a PD array that my interest is in and I expect it and it's usually willing to go back up to it if I'm bearish, if it trades up to a fair value gap. Okay, does that fair value gap create the continuation of the theory that I think that the market will go lower? Or is it performing inside that fair value gap and overshooting and then closing above it? There's a decision to be made there. But what happens, and what did I say, if a PD array can't be even reached? If you can't reach it and you're bearish and it's going up, but it doesn't get there, it just falls short of it, and then all of a sudden starts showing you what? Order flow is heavy and wants to go lower. What does that mean? That means it's decidedly weak. It can't even get back to an inversion fair value gap. So if it can't accomplish that, we're really heavy. We're really heavy. And late in the afternoon yesterday, around 1:30, I was looking at it rallying. I was like, okay, I know what this is. I'm shorting that. And I shorted it into a breaker. I'll show you in the review on Sunday. But I was using a breaker as the basis of it, and then I pyramided into it, and then it created a new lower fair value gap. I traded into the return of an impulse leg lower. I was trading that first return in, which I knew was probably going to be a fair value gap, and then I went into it again and added more, and then I didn't get that sell side delivery. I really was expecting it to do it after 4 o'clock, like accelerate another 100 handles, which would have been like, wow, did you see what? I was waiting to see that in everybody's tweets, like, wow, where did that come from? And then I would have been sliding in saying, check this out. But it didn't do it. But either way, it was a matter of me being able to use the information I'm going to be teaching you that is in the marketplace every single week. It's there. Every time frame, it's there. But I like a second stage redistribution on a market maker sell model, or I like a second stage reaccumulation in a market maker buy model. Now, a market maker buy model, a market maker buy model is a reverse of this. So the market would be creating consolidation, dropping down into a discount just simply to go higher, to go above the original consolidation. Here, on this 4-hour chart, the structure is a 4-hour market maker sell model. Now, if you look at the high formed on October 12th, and on your 4-hour chart, it should be your 10 a.m. candle. That is a smart money reversal. And then you can see the low risk short forms on the October 13th, 6 a.m. candle, and it's trading right up into the fair value gap that formed October 12th at 10 a.m. on that candle. And then we have the first stage distribution on October 16th, which is the 2 p.m. candle. All of this is relative and germane to the 4-hour chart still. And then we had a lot of consolidation in there. And then finally it dove down. And then we have the second stage redistribution at 10 a.m. Thursday, October 19th. And that leg lower did not trade. It did not trade below the original consolidation of the October 27th. I'm sorry, the September 27th low and October 4th low. So there's still room and opportunity to see that expansion lower. And I saw the afternoon rally going in at 130. What's at 130? What did I teach you about 130? I'll give you a minute to think about it. I'll get a drink. 1:30 ends the lunch hour macro. It's like whatever's going to happen in lunch, it ends at 1:30. So I can take a trade and I start observing. What time did I start telling you that I observe the PM session? 1:30. Why? Because it ends at 1:30. But there's no lunch. Nobody takes a lunch, ICT. The markets are run on this idea. It's all controlled. There's a time and schedule for all these things to occur. And when that market was rallying in the afternoon, after lunch yesterday, it trades up into a breaker. That was the draw for it. And then it rotates lower. And it gives you everything you would expect to see form. If it's going to drop, there's acceleration down, creates a fair value gap in the form of a SIBI, sell side imbalance, buy side inefficiency. Then it trades up into that, offering what? An opportunity to get short again if you missed it, and then ride it going into the last hour trading. And just hold for these lows here on the September 27th and October 4th respective 4-hour lows. I don't think it's going to just go there and stop. I think it's going to dig next week deeper into that daily buy side imbalance, sell side inefficiency. That quarterly shift target I gave you a month and a half ago, when we were trading up, everybody else is saying it's going to keep going higher. It's going to keep going higher. I'm going to bet you that it's going to be higher. Where are you at now? You blocked me. That's where you're at. All these things is a tapestry that requires you to spend time learning this language, sitting with me, observing it, and not trying to rush out there to get money.